The 7 biggest crypto hacks and what we can learn from them. Over the past 2 years, the house of cards have fallen. We've seen hack, scam, and all types of different crazy things happen. Now, I honestly believe a fool learns from his mistakes and the wise man learns from the mistakes of others. So there are plenty of lessons to be learned in this. I've lost countless amounts of money, millions of dollars of my net worth, but I stay strong. Why? Because I understand the benefits of being in this crypto market. And if I look at myself now compared to myself 4 years ago, I'm in a completely different position than I was before. Whereas others, I can't say the same for them, right? So let's take a look at the mistakes, and at the end of this video, I'll show you what we can learn from them. So we have the 7 biggest crypto collapses of 2022. We are in 2023 right now, but these are the ones, okay? Now I'm going to breeze through these for entertainment purposes, but feel free to check out the article and give it a read yourself. In fact, I might even link it at the bottom of this video for after. Now, Axie Infinity Ronin bridge hack. The Axie Infinity hack was for nearly 625 million. The hacker took 173,000 ETH and $25 million in USDC in just 2 transactions. The Lazarus group, which was the group that did the hack, hacked 5 of the 9 private keys from the Ronin network, and in 2 transactions took $25 million in USDC and 173,000 ETH. Now, if you don't understand about private keys and why they only needed 5 of the 9, it's similar to, when they have the big red button and they have to turn so many keys. When you are a big company, you need multiple people to confirm a certain transaction. And if you control the majority, in this case, they was able to make the 2 transactions. According to the Ronin group, Axie Infinity issue began when the user base expanded to a unattainable size or unable size. I can't even excuse my reading, right? I'm not the best at reading, but that's the gist of it. Now you can see here, the bridge hack has been the largest to date with 600 million lost. And if you click the link, it takes you to a Twitter post where you can actually see the chart of just how big this was. Okay, the Ronin hack was massive, absolutely massive in comparison to everything else. One interesting thing about this, which we'll speak about towards the end of the video, was the issue occurred in March 2023, March 2022, the 23rd, but was only noticed on the 29th when a user was unable to withdraw 5,000 ETH. And at the time, ETH was like $2,000 to $3,000. So you're talking a lot of money here. And the guy's like, hey, I can't withdraw my money. What's going on? And then having to have a look and check, and they realize, oh, wait, we've been hacked. Quite interesting. It was actually quite interesting. And yeah, Axie, they did manage to reimburse for 150 million, but if you look here, the hack was for 625. So I doubt this guy made, like, if it was all proportional, he probably made like 1,000 ETH back from the 5,000 that was gone. Or I hope it was at least 1,000, because that is terrible. Next, we have Terra Luna. Terra Luna reminds me of like the Twin Towers, not in terms of the catastrophe. Obviously, that was way, way more. That's more real, and real people died. It's a lot more extreme, but you all know where you was for the Terra Luna hack, and that's what I'm trying to get at here. Like, everybody knows where they were when Terra Luna was hacked, because it made you worry about everything. USDT, USDC. It was a lot more serious than you could ever imagine, because this is a stable coin. It's supposed to stay, as you can see here, it's supposed to stay at $1, and it didn't, right? So people were longing, people were shorting, people were trading the volatility on a stable coin, which you haven't really seen. Like, we've never seen a stable coin get this bad. And as you can see, over $2 billion of UST was unstaked and removed, and hundreds of millions of United States dollars were quickly liquidated. People lost hundreds of millions of dollars. So you can see here, let's do the maths. Few hundred mil, another 100 mil, 600 mil, okay? It only gets worse, and this is already in November. If you see here, you'll see the dates. You see May, and then there's another date. I think we speak about March earlier. Yeah, March. you can see month by month. And again, at the end of this video, we'll discuss the lessons, but that's what I'm trying to get at here is like, you can kind of spot these things ahead of time. Investors lost a combined 60 billion due to the panic selling that accompanied the decline of Terra USDT and Terra Luna Classic LUNC, a related token. On September 14th, South Korean court issued the arrest of Do Kwon, okay, the guy who is basically responsible for this mess. Next, we have the Three Arrows collapse. Now, as a venture capitalist myself, this was very big for me. Seeing the mistakes that a investment fund worth 560 million, you guys know, my goal is to get to 100 million. So that means my fund is going to have to be quite large, right? It might have to be close to 500 million, okay? To get to there and to see these guys fall, it showed me a lot about the crypto market, about loans and bank runs, right? In the bank run, in the banking system, if you look at the New York Stock Exchange, sorry, New York itself, if you didn't know, there was a bank run inside of New York. So this place, this big American dream, it can happen close to home, right? There was a bank run there and they get bailed out by other banks. But when there's a bank run here, it's like all the banks collapse. You know, you'll see soon. You take a loan off this guy, he gives you money, you give him money, and you both go down. It's crazy. So Three Arrows Capital collapsed. Okay, when Terra Luna collapsed, the hedge fund Three Arrows Capital, otherwise known as 3AC, which had a peak market valuation of $560 million, suffered significantly. 3AC had invested heavily in several troubled cryptocurrency projects, including the play-to-earn game Axie Infinity, which lost $625 million from a North Korea hack in the same year, and the central cryptocurrency firm BlockFi, which we'll talk about later, which also laid off hundreds of employees. The UST collapse shattered their investor confidence, so bank run, right? The investors want their money back, and they guaranteed them 20% annual returns, which they didn't hold up their side of the bargain. Now, the crypto hedge fund eventually collapsed after taking on major directional trades. That's like taking longs and shorts and the market's going against you, taking loans from other people. Because the founders will not appear in court, because obviously the case is against 3AC and not the founders, they didn't appear in court, and then later they were hit with a subpoena by the judge as well, and they also had to liquidate all of their assets. So cascading again, right? This isn't just affecting them, this is affecting all of the $560 million worth of investments and assets inside of their portfolio, which later has to be liquidated and sold to pay back their investors, which had basically their life savings on the line for these guys, okay? Next, Voyager Digital. Now, Voyager Digital actually filed bankruptcy because they loaned $650 million, okay? If you look at the difference, it's worth 500, right? 560 million was their valuation, and Voyager actually loaned 3AC 650 million. Okay, so it was like, here you go, get out of this mess, here's all your money, and then they still couldn't pay it because they took no security on the loan. It was a loan that you basically had no obligations to pay back. Now, trading withdrawals and deposits were all stopped when Voyager reported that 3AC would not pay back its loan. And Sam Bankman, you might remember this guy, which we'll talk about later, actually offered them a $500 million loan of credit to Voyager Digital to pay it back. So you're starting to see, okay, the house of cards, all of these people all went down together, right? The whole ship went down, which is interesting. We can learn a lot of lessons from this. Next, we have the Celsius hack. Now, there's two more, so make sure that you do, concentrate, because these are things that you basically affected all of us. And you'll see, July. So we're starting to warm up here. We're starting to get closer and closer. July 2022, when the main crypto businesses Celsius declared bankrupt as the price of cryptocurrencies fell, investors on the Celsius network started withdrawing their Bitcoin holdings in search for safer alternatives to have their money in. Consequently, panicked investors left Celsius in volume despite stating that they were forced to due to extreme market conditions. Celsius network halted the BTC withdrawals, right? Not your keys, not your crypto. These guys halted your Bitcoin withdrawals, right? Which is crazy when you think about the value of how much Bitcoin is going to be worth in the future and they're stopping you from having that asset. So you staked your money in Celsius for a return that you actually wasn't getting because, you know, your risk wasn't worth it. Like, imagine staking this for 20% or whatever, and you're thinking your risk is fine, right? You're staking the money, it's safe. So your risk to reward is good. You're risking nothing to gain 20%. You're risking nothing to gain 20%. However, you're not realizing that your risk is actually all your money. So you're risking 100% to gain 20%, which you know is obviously a bad gig, right? Now, Celsius cryptocurrency plummeted 70% in just a few hours following, because again, bank run, lack of confidence. And in the end, after promising people that they could get out of this trouble, Celsius actually ended up filing bankruptcy, and they had a balance sheet of liabilities of 6.6 billion and assets of 3.8 billion, resulting in a $1.2 billion hole in the company's balance sheet from court filings. After that, boom, FTX collapsed, right? FTX has money in all of these companies. They actually tried to buy out one of these. I can't remember which one it was, if we were speaking about it earlier, but you guys already know. FTX collapsed. Sam Bankman obviously left with $600 million of customers' funds, and he was investing that across the board. This brings us to BlockFi. Okay, BlockFi. I feel like a lot of people know about FTX, but not a lot of people know about BlockFi. Correct me if I'm wrong in the comments here, guys. But the collapse of FTX early this month, which wasn't, this is obviously this was made last year, generated a fear and uncertainty across the market. BlockFi, another cryptocurrency exchange, filed for Chapter 11 bankruptcy on November the 8th, 2022. With assets and liabilities ranging from 1 billion to 10 billion, the firm had over 100,000 creditors. So that's 100,000 normal people, close to 100,000 normal people, with investments totaling 1 to 10 billion that these guys basically messed up and lost. And in addition, they had $275 million in debt to Sam Bankman's subsidiary, which is FTX, so FTX and Alameda. So they're in debt to these guys, to this curly-haired guy. This curly-haired guy's in debt to these guys, and these guys are in debt to these guys. House of cards, guys. House of cards, right? Crazy, crazy. And what lessons can we learn from this? Right? The lessons that we can learn are as follows. I can put it down to 3 simple steps. Number 1, not your keys, not your crypto. When you are staking for money, and I've had hundreds of thousands of dollars in other staking platforms as well, doing 20% a month, and we've realized that these guys that say that they're traders aren't that good at trading, right? Because they lose all the money. So what it's realizing is the risk to reward is off. As I mentioned a little bit earlier, right? You think when you stake money that your risk is 0 because you could just withdraw it, and your reward is 20%. That's what you think, right? And then obviously you do your calculations in terms of, let's say Bitcoin, you know, if Bitcoin's at 60K, you're like, right, Bitcoin probably could go down to like 15K, 10K, right, 5K, right? That's your risk. You're thinking, okay, the lowest it could go down is 5K, so that's my risk. You can calculate that. Not realizing that if it's in Celsius, for example, your risk is actually 0. Like, you could lose the whole Bitcoin, which is crazy for the small rewards of like 20% a year, okay? And the next one is hindsight, right? Hindsight's always king, but you can see the House of Cards, and now, obviously I didn't see this happening, but what I can start to realize for the next cycle is that I can start to recognize, okay, when I start to see $600 million worth of hacks, when I start to see companies filing for bankruptcy, when I start to see companies halting withdrawals that we're offering, like staking platforms halting withdrawals, when I start to see companies sponsoring the bloody Super Bowl, right, that's when it's time to say, hold on a sec, maybe it's time to start getting out of here, right, and moving my money to a different asset class, right? It would have been crazy if I moved the few $1 million of investments that we had in all the different projects, and I went, okay, I'm going to move that now, and I'll put that into food, right? You guys are probably thinking, food? What do you mean, right? I could have put that into food, right, or into wheat, or into bloody some of these pharmaceutical companies, right? They all fly off, right? It's not going to do as much as return, but it's stable. And you know, everybody needs food, everybody needs wheat, everybody needs pharmaceuticals, right? That's the land that we live in. So you can secure that money for the bear market and know that it's going to be okay. If you look at the beef chart, the chart for beef is crazy. It's actually ridiculous. It's like a bull market in the beef world. Everybody wants to eat more steak, right? They say that they can't afford things and life's hard, but everybody still buy an iPhone, right? So if you're investing into the assets and the stuff that's built to build iPhones, you're going to make money, right? That's the crazy part of it. You're not going to make 10x, 50x, 100x, 500x like you are in the venture capital world, which a lot of these guys at FTX had in their portfolio, but you are going to at least secure that money for the bear market, and then you're going to be like cash is king, okay? So that's the lesson, right? Remember, 1, not your keys, not your crypto. 2, hindsight. When you start seeing all these companies fall, remember the house of cards might be falling, okay? And number 3 is simple, guys. Always rely on number 1. I want you guys to subscribe to this channel. I want to be a realist. I want to show you guys how to invest your profits as a business. If you're broke, I'll show you how to make a bit of money online. This channel is all about investments. But I don't want you to just rely on me, right? Because I'm still learning too, right? And I'm going to continue learning, right? Look at Ray Dalio. Ray Dalio will tell you he knows nothing. The guy's a bloody billionaire with billions of dollars under management, right? Of course he knows something, but he has that mentality of having an empty cup, like Bruce Lee says, empty your cup, right? And I have that same mentality. I will always continue to learn, right? And I want to learn with you guys. I want this to be a channel where we learn together, okay, and we grow together. So to do that, you also have a responsibility being a subscriber. I want you to educate yourself. I want you to give different opinions. If I have an opinion on something, question it, right? My word is not gospel. Right? If I say that this coin is what I'm investing into, tell me why you think it's a good idea too, or why you don't think it's a good idea, right? Let's make this a community. It's the bear market. So to get out of the bear market, to grow, we need to be a community, okay? It's not like a dictatorship. And to summarize, guys, take the lessons that you've learned. I'll put the link for this in the description, probably later on to keep the engagement, because I know a lot of people probably click off the video, read the thing. Nah, I'll put it in later, okay? Or go find it yourself. Now, subscribe to the channel. If you want to learn how to make money online, invest profits, let me know. Subscribe to the channel, because I'm going to be dropping a 40-minute free training of the exact blueprint, step by step, how I make money online to this date and invest the profits, and how every single time, if I look back at the year before, the year before that, the year before that, I'm always in a better position. And I want that to be the same for you. Because when I go back home, I look at most of the people back home, they're in the same place. But I don't want that to be like that for you. I want you guys to elevate every single year. And you can do that if you subscribe to the channel. So thank you very much for tuning in, guys. And I'll see you in the next one. Peace.